Tesla is down another 3.5% in the last 5 days. Over the last month, it is down 14%. It is getting absolutely hammered. And again, you can see that's the same for TSLY, down 3.2% in the last 5 days and 15% in the last month. So again, it's no surprise that my TSLY synthetic fund is also getting slightly hammered. I've added a few new features onto this sheet just because I did something slightly different. So we'll walk through that. We'll also walk through the chart. And as you can see, when I started back in late December, we had the little pop up and then it's just been going down and down and down. So we'll go through the good and the bad, how much money I've made, all that good stuff, all else worth that you like and subscribe and comment down below. So week 4 ended with $423 in premium. So in the first 4 weeks of this fund, I have made $1,800 or $18 per share because this is a 100 share synthetic option that I'm playing. And you can see here with the dividends, I am down 10% if I reinvested and down 13% without those. So if you get, again, it's not around the same, but if you just look at the last month, Tesla's down around 14%. And again, without dividends, I'm thereabouts. And with dividends, I've crawled back that 3% because of selling the covered calls. So if we have a look at what we last week, so if you guys remember, we had $325 in this section over here, which is what we sold. We sold the 222.50 expiring on the January 19th. And very similar to all the other weeks is Tesla drops. So when Tesla dropped, I bought this option back from $65 and I rolled down to my synthetic strike. You can see here that we did that for $102 net credit. And then we managed to buy this thing back for $1 on the Friday. We netted 423 where we originally sold the covered call for 325. So we made over an additional $100 than what we estimated on last week's video. So again, even though Tesla is going down, I'm still capturing the dividends and the premium, which is all good. And again, that is 1.57% of the current account balance. So before we go into what we sold in terms of the new strike, for all the previous weeks, what I've been doing is buying back or buying and selling or closing the synthetic long stock option. And what I decided to do for this week is I decided to keep it, which is why I've added in the Tesla price and what the current Tesla price is, and then the unrealized amount. So we've got the 217.50 synthetic call and Tesla is trading at 212.19. So the difference between those two is in my brokerage account, I've got an unrealized loss of $533, which I've added to the total P&L because I think that's fair. So I'm sitting with this unrealized because again, I do think that Tesla, when we go into the charts, will need to kind of either flat or stay flat for a week or go slightly up. It does have earnings coming up. So again, that needs to factor in the overall process. But overall, this is operating exactly how we expect it to do. So again, if we go to TSLY and look at the last month, down 15.9%, where without dividends, I'm down 13%. So we're going to stick with the plan. The plan is to continue to keep selling premium. In terms of what I sold, so I sold the 26th of January, so expiring next Friday. Sold the 220 strike, which is slightly above the synthetic that I've got. I got $401 as part of that equation. So again, with the estimated payout, it's $400, which is 1.48% of the capital that I own. So if we then look at the chart, and I'll try to explain why I've done that. So last week, the expectation was that I did expect Tesla to spike up and, kind of hit the missed pivot there. You can see we did get a situation where we went to a high of 223.49 and my synthetic is at 217.50. So again, we were in a positive territory for a bit. I could have probably closed it out and reestablished, but again, it fell anyway. So it didn't really make that much of a difference. So we did hit the missed pivot. So now what we've got, or hit the weekly pivots. Now this is what we call technically a missed pivot level, just how this one is here and how this one is here. But the difference with this one is that price in 1, 2 in the second week came back and hit this pivot. What we have now is we have the estimated pivot. And again, I've done this manually just by going to the weekly chart, taking the high, the low, and the close and dividing it by 3. And we can see here, if I go into this, we can see that the pivot is at 240 the week. So again, what we can also see here is, for those who look at technicals and follow divergence, is that we've got price making lower lows. If I can just get back to this one, you can see price is making lower lows, and the RSI indicator, which is oversold, is basically flat. So the RSI has a different trend to what the price is doing, and therefore that is what we call bullish divergence, because price is making lower lows and the RSI is should be making higher highs, but it's technically flat, right? So again, this is showing us that we could get some exhaustion in the market, and where we can potentially see this kind of U-shaped recovery, and then whatever it decides to do later on. But I'm truly expecting that price to hit this level and potentially hit this level, because now it's 1 week. So in a couple of weeks, as it did here, you can see that price kind of rolled over, and price could potentially roll over. But then again, we do have earnings to contend with as well. But that is why I've gone somewhere in the middle between the this missed pivot and this and this current next week's pivot level at the 220 strike. And again, I will continue to roll this down if we kind of filter out. So once this option has had about, 40-50% of it taken out, then I will probably look to roll this option down. So that's the plan. That's kind of where my head process is at the moment with this. And again, we are seeing this kind of channel as well. And again, it could zigzag into this channel. So hopefully we can get some breakouts into the upper channel pace to really see some momentum going back up the upside. And again, this is just purely looking at it from a technical perspective. So what the plan is then is, with the synthetic, I have to reestablish and close out the synthetic, because it does expire next week on the 26th. So that's what I will do before the week's out. I will close this position out. Hopefully, if the price does go slightly back up into this area at 213, 214, hopefully I can do it for probably a minus $100, $200 loss, which again minimizes the impact. Again, not realizing that loss as I've done in previous weeks. And then hopefully it's, this will hopefully expire worth it. So I'm quite happy taking 400 and knocking 200-300 off this number as well, and then be able to reestablish for a juicy covered call for week 6. So that's the plan. That's what I'm thinking of doing. Again, just trying to actively manage the position. Again, we're 10% down. Tesla itself is, the last month is 14% down. So the covered calls are softening the blow slightly. And again, we've got 30,000 with current balance of 26,990. So again, this is why I don't want to do 200 shares or 2 synthetic call options, because yes, I can make more money, but again, downside is a lot more, because again, I've got limited capital to play with. So let's see what happens in the future weeks. Tesla could have quite easily just gone back up, and that's what happens. And just wanted to also show you guys as well, if we just look at Coinbase stock price, right, over the last month or so, it's down 22.5%. I think it's Coiny yield max. I think it's that yield max. Connie share price. And again, you can see here, if you look at the last month, again, it's also down 27%. We look at year to date. Okay, if you look at the last year, it went on this massive run because Coinbase went on the massive run. So again, it's all about either timing these funds, or trying to trail that trend, or diversifying across different types of trends, or yield max funds to A, pick up premium and dividends, but also B, trying to stabilize your portfolio, because again, if you get these aggressive drop-offs there from where it was sitting at after $20, again, that is a big month. If we look at, last 5 days, last month, there we have the high there, down 30% in the past month. So again, it doesn't matter that whether it's Tesla, Coinbase, etc., you still need the underlying stock to continue to go up. And that's what we're trying to look for as part of the process. So again, really hope you've enjoyed this video. Like, comment, subscribe, and I shall see you guys in the next one.